Yeah, so this is the first time that they've cut their sales guidance in almost a decade. Actually, I think we found one instance in 2010 where they did as well. But they're known for never cutting guidance, and so the fact that the stock is up today means that the market was clearly expecting this. And actually, we had been talking about how their guidance of 5% same-store sales growth for the year had looked a little bit optimistic as well versus our expectations. So I think the cut to 4% seems reasonable. It seems relatively achievable, but we do see risk to their 3-year targets, which are going to be updated in December when they have their Analyst Day. So the last time they had an Analyst Day was in December of 2017. They were coming off of a peak earnings year. They put up 6.8% same-store sales growth that year, and they were talking about averaging 4.5% to 6% per year through 2020. So now 2019 is coming in below that range. We think 2020 is also going to be decelerating. So the theme here is that we think that growth is still positive, but it's slowing, and we think that there's going to be another guidance cut, as it were, to their 3-year targets, which I think is a risk that isn't really being considered for December.
Right. In terms of consumer strength, what are the trends that we've seen throughout the quarter, and is there any concern that the consumer could be soft in the back half of the year?
Yeah, I think that there are some positives in the second half of the year to consider. For one, they're going to be lapping some hurricane headwind that they had in the first half of the year. So that comparison gets easier in the second half. They're also looking at now some lower mortgage rates, which may help. It doesn't historically have a high correlation to their same-store sales growth, but it's something that is an incremental positive in isolation. So that's something that could potentially help overall renovation spending. As mortgage rates come down, people will either buy a new house that they've been thinking about getting, or will refinance, and that may put some cash towards renovation spending. But otherwise, when we look at the full year 2019, we're past Home Depot's peak same-store sales growth year, which was 2017. We're past their peak earnings growth year, which was 2018. So now we're cycling through all these peaks, and we're at a point of deceleration. The stock is up 25% this year. Have the fundamentals improved 25% year to date? I don't think that we're at that point to feel that much more confident.
Let's go from peaks to lows.
Yeah.
All right. Right?
Like it.
Yeah, you like it? What about lows?
So Lowe's, one of the themes that we're focused on for this year, besides, high quality defensive categories of hardlines, which I think home improvement falls into, is turnaround stories that are really compelling. So we look at Lowe's versus Home Depot. The operating margins have been underperforming. The same-store sales growth has been underperforming. They have a brand new management team. They've turned over basically the entire management team through last year. And so now they're starting with a clean slate of a lot of folks that came from Home Depot, to be honest. And so now they're using some of that same playbook in 2019, 2020. Now, there have been some hiccups in that turnaround, and I think that that's to be expected with a company.
Last quarter was a hiccup, wasn't it?
Exactly.
So is this going to be the quarter that the new management team shows its stuff?
Probably not quite yet. I think there's still going to be some issues in the second quarter that the street is expecting. I mean, I think same-store sales could come in, pretty decently, but we will likely still see margin compression, which is what happened in the first quarter. But in the second half of this year, I think that's when the results start to get a little bit cleaner, and when some of the initiatives that the new management team has put in place actually start to come through. And longer term, we think this is a really compelling turnaround story, and we think that when you're looking for stocks that have earnings growth acceleration, this is one that we like. Whereas Home Depot, we're seeing that earnings growth deceleration where, it doesn't really justify multiples expanding at this point.